Joining me today is someone who needs little introduction. Ben van Beurden, Chief Executive of Royal Dutch Shell, has in a single stroke transformed one of the world's biggest energy groups, making a bold £55 billion bid for BG Group that some say could be the trigger for a wave of deals across the industry following a collapse in oil prices. You've just sealed the biggest takeover in the energy industry for more than a decade. Investors buy the logic of the deal. They see a big deepwater presence in Brazil. It cements Shell's position as a global leader in LNG, but there remain questions over the price paid, in particular the 50% premium Shell has paid for BG. Why is that?
Well, Chris, I think you're right. The logic is very compelling. It is in one very big step. We accelerate two key growth strategies that we have. Growing our integrated gas portfolio, LNG portfolio, growing our deep water position. Both areas where we have already a strong leadership position. And now we add in it a very, very strong portfolio and a position that BG has. And that actually makes us a very, very strong, powerful company in these areas. If you look at how you need to value or need to assess acquisitions or combinations like this, it is actually much more sensible to look at the underlying value of the company and how it is being perceived in the market. That's a more logical and also more pragmatic way of looking at premia and the like. If you look at what the company is worth and what it would be worth to us, including all the synergies, and then you compare that to the market capitalization, there is actually a huge gap in value to us and value apparently to investors. And part of that value, of course, you have to return that to the current owners, the BG shareholders, and then the value that is left is there to enjoy by all shareholders. And I think we ended up exactly in the sweet spot. The fact that it relates to a 50% premium is probably more an indication as to how much the company was undervalued rather than how much you paid for it.
Was it your first pitch at BG though, the price you paid?
No, we had a good and tough and an honest, sharp commercial discussion. But I must say, the discussion that Andrew Gould and I had was one where we very, very much believed in what it is that we were going to create. A very, very strong combination of two companies that complementary made a lot of sense.
Now, sitting back a bit, some people are seeing this deal as a precursor to something much bigger in the oil industry, a transformational wave of deals as companies respond to the collapse in the oil price by seeking salvation with bigger, stronger partners. Is this something you see happening?
Well, it hasn't happened yet in the way that probably a lot of people thought it was going to happen in the early part of the year. You have to bear in mind, of course, that we saw a continuous decline in the 6 months leading up to, say, March, April. And since then, oil prices have started to come back a little bit and now seem to stabilize a little bit at the $60 to $65 Brent level. So I think that big window of opportunity where people were thinking of very, very low oil prices indeed probably has gone away a little bit. You don't know where the oil price can go. If it stays at this level, I wouldn't be surprised that the big wave of consolidations is not going to happen and that we got the timing right. If it goes back to very low levels again, who knows? If it goes up to higher levels in the short term, I think the window will close.
We have seen this rebound in the oil price. Is the Saudis' strategy of edging out higher cost oil production, and particularly US shale, working, do you think?
Well, I think what has been very clear from the position that OPEC and of course within OPEC the Gulf states have taken is that people need to appreciate that this is an industry where there is price risk. I think over the last few years, the industry, and particularly also the small shale producers, had probably gotten used to the idea that the oil price was given because it was always going to be defended by OPEC. And now that they find themselves much more at the price setting end of it rather than the price taking end of it, of course a new dynamic has emerged. Is it working? Depends a little bit what it is, what I had in mind. If it was the reminder...
Well, US production's not falling off a cliff, is it?
No, but I don't think it was ever going to. What we have seen, and we would need much lower oil prices for that to happen. What we have seen is that, of course, it still makes sense to drill and complete your additional well to fill up existing infrastructure. So what we call in the industry drill to fill is still an economic proposition. But actually to continue to grow production to the point that significantly new infrastructure investment is going to be required to evacuate, that I think needs higher oil prices than what we are seeing today.
Mr. van Beurden, thank you very much.